It's Friday, July 31st, and here's what you need to know by noon. The Federal Reserve held interest rates steady this week, and 3 of its own officials voted against it because they wanted rates to go up. Plus, a federal appeals court tells the administration it can't jail immigrants without a bond hearing, in an opinion written by a judge this president appointed. Gas is back over $4. And the one economic number that isn't flashing red. Start with the Fed, because the decision wasn't the story. The vote was. On Wednesday, the Federal Reserve left its key interest rate exactly where it's been all year, a range of 3.5% to 3.75%. That's the 5th hold in a row. Nobody was surprised by that. Here's what was surprising. The vote came in 9-3, and the 3 who broke ranks weren't asking for a cut. They wanted an increase, immediately. They are Beth Hammack, who runs the Cleveland Fed, Lorie Logan at the Dallas Fed, and Neel Kashkari in Minneapolis. Hammack and Logan had been signaling this for weeks. Kashkari was the surprise, and his is the vote that matters most, because it means the faction inside the Fed that wants tighter money is bigger than Wall Street had it. You have to go back to September of 2016 to find the last time 3 members of that committee dissented in the same direction at the same meeting. That is how unusual this is. The man they voted against is Kevin Warsh, who was sworn in as Fed chair in May. And this is the part worth sitting with. Warsh was widely expected to bring rates down. He has now held them 5 times in a row, and at his news conference he sounded like the Hawks. His words, "There is no soft inflation target. There is no soft implicit target. Not on this committee's watch." So why is the Fed arguing with itself? Look at what landed Thursday morning. Inflation is coming down, and it is still too high. The Fed's preferred measure showed prices up 3.7% over the past year, down from 4.1. Strip out food and energy, and it's 3.3. Better. But the target is 2%, and it hasn't been met in 5 years. At the same time, the economy is slowing. The government's first estimate put growth in the second quarter at 1.5% a year, down from 2.1 in the first. Slower growth, sticky prices. That's the whole argument in a sentence. And both sides of that committee can point at those numbers and feel right. The bond market rendered its own verdict, and it wasn't kind. The yield on the 30-year Treasury climbed above 5.2%, the highest in 19 years. In plain terms, investors are demanding to be paid more to lend the government money for a long stretch. That's what it looks like when the market isn't fully convinced inflation is beaten. And here is where all of that stops being abstract. The national average for a gallon of regular gasoline is $4.09. A year ago, it was $3.13. That's up about 30%. Diesel is worse, $5.33 a gallon, against $3.74 a year ago, more than 40%. And diesel is what moves freight, which means that number shows up later in the price of nearly everything else. The cause isn't a mystery. AAA points straight at the price of crude oil, and crude is high because of the fighting around the Strait of Hormuz. That's the entire chain, a war on the other side of the world, a barrel of oil, and the number on the sign at your exit. Now the courts. On Thursday, a federal appeals court ruled that the government cannot hold immigrants arrested inside the United States without giving them a chance at a bond hearing. The Ninth Circuit split 2-1. The majority opinion was written by Judge Daniel Bress, appointed by President Trump, and joined by Judge Margaret McKeown, a Clinton appointee. Judge Carlos Bay, appointed by George W. Bush, dissented. The fight is over the wording of an immigration statute. Last July, the administration issued guidance expanding mandatory detention to people picked up in the interior of the country, reversing the older practice, where most people arrested away from the border, without a criminal record, could ask a judge to release them on bond. Bress wrote that the government's reading would require, quote, the mass detention of unadmitted aliens present in the United States, and mark a sharp break from the past. B's dissent argues the majority is demanding a clarity from Congress that the law itself doesn't require. What it means in practice: thousands of people held across the Ninth Circuit's western states could now get bond hearings. It does not apply to people stopped at the border, or to those with certain criminal convictions. The Department of Homeland Security says it strongly disagrees with the panel and is confident in its legal position. Other appeals courts have come out the other way, and that split is usually how a case finds its way to the Supreme Court. One more number, the one that isn't flashing red. New claims for unemployment benefits came in at 197,000 last week, lower than forecast, and the number of people still collecting benefits fell. Economists call this a slow hire, slow fire market. Not many layoffs, but not much hiring either. Here's why it belongs in the Fed story. 197,000 is a strong number, and it's a large part of why 3 Fed presidents feel free to argue for raising rates. If people were losing jobs in volume, nobody on that committee would be pushing for tighter money. And overnight, the war continued. Iran's Revolutionary Guard says it launched a retaliatory attack on an American base in Kuwait after U.S. strikes on Iranian targets Wednesday night. That is Iran's claim. Neither the United States nor Kuwait has confirmed it, and we'll tell you when that changes. What to watch? September. Futures markets now put the odds of a Fed rate increase in September at around 60%. Between now and then, the committee gets one more inflation reading, one more read on consumer prices, and next Friday, the July jobs report. That last one matters most. Warsh has stripped the old guidance language out of the Fed's statement, so there's nothing left to read but the arithmetic of the vote. Right now, that arithmetic says 9-3. That's Friday, caught up. A divided Fed, a 19-year high in bond yields, $4 gas, a Trump appointee ruling against the administration, and a labor market still holding. We keep it straight, and we keep it quick. This is No by Noon. See you tomorrow.